All right, guys. So I just had a couple thoughts midweek that I wanted to get through because we're kind of at an inflection point here in the market. So why don't we just kind of dive in real quick? I also wanted to do a little update on the progress that we've been doing on our account challenge. Anyway, in the near term, it looks quite possible that we're forming some kind of bull pennant on the 4 hour. I don't usually get too excited about these. A lot of people A lot of people will use these, but I don't really get very excited about these patterns. But if it does break up to the upside, then you know, it will prove that that's where it was going. But either way, this what this really means to me is that we're in indecision because we have lower highs and higher lows. So anyway, in a little bit of indecision right here, and so I wanted to kind of take this moment. I know it's midweek, but I wanted to kind of just take a step back and see how we're doing. It's not going to surprise me at all. To let me get back on the daily time frame. It's not going to surprise me at all if we do get some kind of pullback, just based on our speed line from the last move. We this move is pretty accelerated off the lows compared to the previous move here, and so anyway, I just want to kind of keep a balanced view because, although we have really good price action coming out of the lows and we have that overbalance in time and price, which increases the probability significantly that we're done with this downtrend because the bulls have basically been able to push prices higher for longer. And we also had breaks of some significant swing lows and a breach of this 50% level. So if we're looking at four criteria as far as trend reversal, we have overbalance in time, overbalance in price, breaks of major swings, and breaks of 50% levels. So all of those have been triggered, which means that if we do get a pullback here, it is highly likely that it will be a higher low. And that'll actually probably be pretty good because I think that that's going to kick a lot of people out of their positions and bring a little bit of fear back into the market, which is always healthy because we did kind of shoot up into greed pretty quickly. So, how do we prepare for that? There's an old saying that more money's been lost preparing for a correction than in the actual correction. So sometimes it's like, well, the trends are up, so we don't necessarily want to try to dodge every little movement, but we do want to just be prepared for that. So really what I'm looking at is if we do end up seeing some downside here, then, well, that really just means that a lot of these charts are going to probably be providing some pretty unique opportunities here in the near future. I do want to go over one trade that we entered. I posted this in the group, but anyway, this is a token that I've been interested in for a long time. It's on Solana, but it's just anyway, there hasn't been any indication of strength or recovery. But now that the market is heating up, it's showing a lot of signs of strength. Didn't want to get into it on this run because, well, you just don't want to jump into something. And so I'm waiting for more structure to be made. And really, what I ended up doing here was once the swing turned down, what I did is I started uh, I would have entry levels above the previous bar because as we're in this candle, if we breach the top of this candle, then it confirms that we're in a daily uptrend. You can see I have my trend indicator down here. And so I really just want to, Gann talks about when the safest place to enter is, and it is essentially in this area here when the trend turns up. And so that's basically what I did. As we were coming down, I was setting my orders above the previous candle. That didn't happen, so we move it on down. And it didn't happen on this candle either, so we moved it down here. And then today, although we're in a down move, it is an up bar, meaning that we're have a higher high and a higher low. So basically the daily trend just turned up on this one, and we are seeing some support on the 50% level and the trend line so far. And what that also did was it does give us a tight stop because if we breach this level, then we'll go back to neutral in the daily trend. And, that's quite possible seeing as we're seeing some potential of a reversal. So that's kind of why you want to have a balanced view. It's like the trends are up. You want to get into the trend, and you want to get in early if you can. And so we've basically gone in as early as we can on this, but with a pretty tight stop loss to the downside, because if it breaches that level, then we'll just kind of have to take another step back and reevaluate. So that's kind of what I mean by identifying what your risk is. How much risk am I willing to take on this trade? And sometimes that depends on the environment. We're already kind of a little bit hot right now, and there's other signals that I would like to see, like going back to the exchange volume. We go over this over and over again, but it's just so important. So let me zoom in on this. We got in really, really early on a lot of these trades, honestly, with only a few signals, I guess. But what we are seeing is the exchange volume recovering pretty strongly. And so the real signal to me would be a breach of this high. That's definitely what we want to see to get that exchange volume trend changing. And that's going to give us higher conviction of these trends being more sustainable. So, but I do like to see increased volume with the prices rising. That's a good sign. If it was the other way around, then that would be a pretty weak signal, and we would have a lot less. We'd have to trade accordingly. We wouldn't have as much conviction. So anyway, I wanted to go over that trade entry that we had so far. And yeah, it's just really good risk reward opportunity here, because we're hitting it right as the daily trend hits, and it is a tight stop loss. But there's just to these major levels, that's 100% move. So I mean, and I was also able to use Forex leverage on this because of where we were here. So basically risking 250 to make 1,000. And so you can do that many times. And that's kind of the idea. It's like everybody thinks you have to be right more than you're wrong. That's not correct. I can be, with this risk reward, I can be wrong several times and be right once and still make money. So yeah, just a little lesson on that one. And right now, I'm kind of cooling down as far as entries go, because I'm expecting a pullback. So I don't really want to be overexposed to the market. And so I wanted to go over a couple concepts too about keeping cash on the side and how that can affect your portfolio. Because some people think that you might want to be 100% in the market at all times, like if you're dollar cost averaging over a very long period of time. But really, what can happen is if you are 100% in the market, that means that during your downside, you have more of a drawdown. So if you had a portion, let's say you were only 90% in the market, and you had a 10% cash reserve, well, that cash drag on the way down is going to minimize your drawdowns. And then if you're able to allocate more capital during those low areas, then of course your upside potential is increased. So over the course of several years, if you are able to have cash tactically on the side, it will outperform being in the market the whole time. So that's kind of another concept that I have here is we had a really, really amazing trade on virtuals where we got in on the swing break of this double top, and so far it's done really, really well for us. So I was able to actually go in with size here because we had that overbalance in time and price on Bitcoin, giving me higher conviction that these moves were going to be sustainable and that the low was in. And so anyway, we're staying in this trade, but I've definitely taken at least half of the margin out of this trade, which is really good. So you're reducing your risk. At the same time, you're stacking cash on the side for the potential. If we do get these dips, then we have some more capital to allocate because things are heating up and moving quickly. And if it doesn't, no problem. I'm already in a winning position. That's a little bit larger than some of my other ones. And so we can just let that ride. Yeah, let's see. The other thing I wanted to mention here too. So yeah, having negative funding rates is pretty insane, and I've shown this in other videos. But if we go on the weekly time frame, let me just do that quick. Yeah, so if we go on the weekly time frame and we're just looking at, I'll get rid of this. We're just looking at the funding rate, which I won't get into funding right now because that's probably too much for this video. But either way, if we just go simply look at when the funding rate is negative, those are often very good times to be interested in the market. You can see right here, last year when the funding rate was negative, that would have been a very good entry. And not on the weekly, but we have extremely low funding rate And then, of course, on the daily, we even when prices were heading up, we had some negative funding rates. So I just thought that that was an interesting um, bit of data there. And then if we look at the aggregated open interest, this is also interesting. Another reason that um, I'm just using a little bit of caution here because we don't have the full signal of the exchange volume increasing. So we've been doing really well. We've more than doubled the account in a week, which is pretty great. Being conservative, having tight stops, and placing our entries um, in areas that have a higher likelihood of success. So let me get that open interest back up again. This is something that's interesting in the very short term. One of the reasons, um, another reason why I'm not necessarily pulling out of the market, but I am going to be a little bit more conservative on my entries in the very short term. But I think long term, I would say we have another 6 to 8 months of aggressive upside in the altcoin space. I think that this is probably the start of, that altcoin season that everybody's been waiting for. It typically does happen in the very end stages when more and more retail get excited and jump in later. Even though we've been in a bull market for 3 years, people will jump in later, and that kind of gives you the last exhaustion of the move that can last quite a while. But either way, what I'm really getting at is, as you can see here, open interest, which is um, it's a measurement of how much money is in leveraged positions, meaning how many people are interested in trading. And so when you see increased open interest as prices increasing, you can deduce that more and more people are getting long, and that the amount of money that people are using in leveraged positions is increasing. It's basically saying that yes, more and more people are interested in using leverage because they're seeing prices increase. But if you notice, we've kind of stalled out here, and the open interest has started to die off a little bit. So I think basically what you're seeing, it's been a couple times where open interest has dropped while the price is rising, and you can basically deduce that people are offloading their positions because they had a good position and they're in profit, and so they're taking some profits. So this doesn't mean that we go straight down from here, but it is kind of an early sign that even though price is going sideways, open interest is falling. Kind of a divergence there a little bit. So we could see some very, very intermediate short-term pain, but that's actually a really good thing, and that can provide a lot of opportunities. So especially if you're late to this move, I wouldn't necessarily get in this very moment and wait for some other opportunities to present itself. One example I have of this, if I can find it, is Humans AI. It's a AI agent play basically. Either way, if we go on the weekly, we can see that we just entered a weekly uptrend on a break of this swing. So that's actually where I have my entry, and this is just a spot position. So I'm just willing to hold this basically for the duration because we're right at range lows here, and then so range lows to the highs. Let me just see from our entry to the very highs. Yeah, it's a 418%. So it's just I took some small profits from uh, some of our trades earlier and just put a small cash position into this that I can leave for the rest of the bull market, because you can see that when the markets are hot, uh, this does really well, and this one's definitely more of a retail driven token. So I'm not really expecting to see any action in this for like in the immediate term, but it did have that signal. I really like having this entering a weekly trend near the range lows. So it really, the risk to reward is really great. So some of the other ones that I'm waiting on entry, actually Hype is one of them that I was really, we had a good run up, and I think I'm not sure even where we took profits, but I got in very early on this move and I got out pretty early too, probably in this resistance band here. And we just, this week, broke here and are in a weekly uptrend. But some of the time analysis lining up here um, is indicating an area of potential reversal. Now, that could have actually marked the reversal here from the downtrend to the uptrend, but also with this time analysis, I'm a little hesitant to just jump right into, because it is, according to the time analysis, potentially due for a pause. But anyway, but that is also what I'm looking for. I think I'm going to have higher conviction in some of these once the weekly trend turns up or neutral, because some of them I have been entering on a neutral position. So Beam, for example, um, actually Beam, this is a good one because we do have a higher high here. And once we breach this level, we'll be in a weekly uptrend um, on Beam, which will be good. And that'll be entering this range here and to the upside there. The top of the range, 300%. It's pretty good. So anyway, one of the things that I've been learning this cycle is that it's not really a market for position traders, which is how I started. You just accumulate a position during bear market lows and hold it through the cycle. That works really, really well with stocks, Bitcoin, some of the Magnificent Seven, and it works really good for that. But this particular cycle, not so much. So it is kind of a trader's market. So um, instead of thinking that I'm going to buy this thing and hold it for a couple of years, it's more like follow the swing chart, enter when things are looking more favorable, and then looking for signs of weakness to get out. So one final thoughts here. Two is a lot of these charts are at their volatility lows, which is really good. Those are really good times to be entering. If you go back and back test this is average true range is the indicator, and you just look for periods of time where you're at the lows of the volatility, and those are much easier times and better times to get in. So I've gone through a lot of these charts, and what I would say is there's a lot of room to the upside as far as volatility is concerned, but keep an eye on it because if the volatility is high when you're entering, that means that price is moving around quite a bit, and it's going to be a little bit easier to shake you out of a position. So anyhow, those are just kind of some quick little wrap up thoughts that I have. I wanted to go over our new position in TARS AI, which is a Solana AI infrastructure play, basically. But either way, we just entered an uptrend, and so we will capture that move if it goes up. If it goes against us, it's not really a big deal. It's a small position, and we already know what we're in for this trade. So either way, I kind of had a feeling that this week might be a cool off week, but you just never know, really. I mean, things get hot, so you kind of have to be in the market because um, you know it spends 80 markets spend about 80% of their time figuring out where they want to go and about 20% getting there. So if you're not in it and you're late to the party, then well, you're not getting as much out of it as you can. So I just wanted to take this opportunity to talk about how do you have a balanced view and how do you manage your own portfolio with you know having conflicting signals where we're in the longer to medium term, we're ultra bullish, major signals flashing to the upside, but also not FOMOing in on the moves and waiting for a pullback, um, and just trying to how to keep a balanced view on that, basically. So anyhow, I'll just keep posting anything I find, any other entries that I have, I'll be posting, and yeah, we'll just kind of keep track of this as we go. I mean, honestly, super bullish right now, but also a little cautious in the near term because it's just too easy to blow yourself up, and you have to have a balanced view. So if we are to have a reversal, I think it's very likely that it will be a higher low, and we have data to confirm that. And what would be really nice, honestly, like I think I would actually be feeling better if we had a pullback. Because then it's going to give us some more structure to enter on some weekly uptrends, which I think will be really nice, having more conviction there. And then we'll also be able to see what the exchange volume is doing by that time. And if we've breached those highs in the exchange volume, now we're really starting to layer the data in our favor. So right now, I think we have a lot of good signs. But really to have more conviction, we got in very early is what I'm saying. And so I think it's time to kind of just take a breather and a cool back, be happy with what we're in. If the market takes off, that's really just the way it is. You need to have as many layers of confirmation as you can, especially in this market being so volatile. So if we have to give up some of the upside, it's really not that big of a deal. I mean, even if we had to wait until we were midway in this range before we were getting these confirmations over balances in time and price per chart and everything, even in this one, it's still 100% to the top. And then it's going higher most likely beyond that. So anyhow, hopefully that was clear as mud, and we'll just keep track of how things are going. Oh, yes, that's right. The very last bit of good news that we have here is on the monthly chart. This was actually looking a little scary for a minute. Let me take these indicators off. So if we just zoom in on the monthly, we had a down bar and another down bar, and that for a period of time, this particular month, because that's another reason I wanted to make this video, is we had a close of April, and if this bar was a down bar, if we didn't breach the top before the end of the month, this would be 3 bars down on the monthly, which I won't do this right now, but if you go in previous, well, I guess I can do that right now. Especially this cycle, we had 3 down bars here, and as well here. Actually, this is only 2. Excuse me. Anyway, anytime you see 3 down bars on the monthly scale, it definitely is signs that we're heading in the wrong direction. So having that, we avoided basically that bear market signal. And this is actually an outside bar. So the swing is up now. We're still up on the monthly, which is a really good sign. So that was kind of it was a pretty aggressive, well, not as far as Bitcoin is concerned, but the altcoin space for sure was very aggressive and is also in a much weaker position than Bitcoin, which is another reason to be a little bit cautious here. So yeah, anyhow, that actually wraps it up, and we'll just see how the coming weeks shape up, and we're just gonna learn how to be happy no matter what. Either we're in the market and we're doing well, or we got to wait for some pullbacks, which is, I think that's the other thing. It's like the pullback. If we do get a pullback, probably the best buying opportunity that we're going to see for the rest of the bull market. The bull market presents lots and lots of buying opportunities, but this is probably going to be the safest opportunity to get in the market for the rest of the cycle. I don't think I'm going to be advising anybody enter the market after this, just because it's going to become much more volatile, price wise, emotional wise, and you're really just flirting with fire, because I mean we've had a bull market going for the last 2 years, and if you haven't been in it, then I mean that'll be something to learn. Get in here when the volatility is low and nobody's interested, and get out when everybody seems to be really interested. So anyway, it's time to be on our toes. I think there's a lot of excitement to happen in the next few months, but we just have to be aware of the beast that we're dealing with, So I don't want anybody to get burnt. I don't want anybody to ape in and lose all their money. I want to kind of show how to have a balanced view of the market and not get too swung, because I mean, as far as the media was concerned, over the last month, we were going major recession coming, and the most bearish news you could imagine, and all the tariff scares and everything like that. But at the end of the day, this was just a measured correction in Bitcoin, something that it's done 7 times this cycle, with a 30% drawdown, which is completely normal and measured. So let's just cut the crap and just look at what the data says, and we'll be ahead of most. So anyway, that's all I got.